In general, transparency enables decision-making. And whenever information is missing, or it is too costly to acquire or very difficult to process, I need to make assumptions. And these assumptions could lead to wrong inferences and wrong decision-making. The government requires firms to be more and more transparent about the tax strategies and the tax burden per se. Gathering and processing the information incurs costs to the public, but also to the tax authorities. I try to assess the consequences of mandatory and voluntary tax transparency and thus contribute to a more efficient tax transparency regime, one where the costs do not excess the benefits. Since tax transparency is a multifaceted sword, we try to investigate how firms respond to new transparency mandates and how stakeholders in turn react to these new behavior. Our research, for example, shows that mandatory tax transparency triggers firms' actions. A substantial amount of firms, however, pursue strategies where they try to avoid the mandatory requirements and thus cast severe doubts on the efficiency of these regulations. In contrast, we show that for specific kinds of voluntary tax transparency, for example, with regard to tax loss carry-forwards or the effective tax rate, firms seem to cater to the needs of their stakeholders and provide more information voluntarily and thus to lead to higher tax transparency.